So two buy ideas, Varun. One is I would term it as a high risk idea. And it's a buy on Balrampur Chini. It's a very interesting chart. I think on the daily time frame, the stock is forming a classic bullish flag pattern in this range of 160, 162 as a hurdle and closer to 145 as as a support. And I believe that the stock is now on the verge of breaking out of this bullish flag pattern. So this could be not just a breakout in Balrampur Chini, but this could probably have strong effect into many of these other sugar stocks as well. So I'm particularly looking at a buy on the on Balrampur Chini for short-term targets of 170, 175 range. Stop loss could be kept at approximately 145. The second would be a buy on Sun TV. Again, a very interesting chart. I think from the media pack, this is one of the few stocks which looks extremely attractive. It's been consolidating over the last 2 3 months, and generally we see consolidations as a positive sign, because if it happens at the higher end of the price rally or the range, which means buyers are still intact, and they are looking to accumulate the stock. So I think in this regards, Sun TV also looks fairly attractive. Would place a target of 500 on the stock, and stop loss could be kept at approximately 460.
Raghavendra, coming to you. Firstly, great to have you on the show. I think it's the first time I'm interacting with you on here. Clearly the bulls are in control today. Given that backdrop, what's your high risk and low risk idea for our viewers?
Let's start with the low risk idea. We have Cochin Shipyard as a good investment bet. Cochin Shipyard is a perfect bet in terms of Make in India and the current thrust on defense outlay of the government. This Cochin Shipyard has Indian Navy as their major client, and India's new thrust on guarding the Indian Ocean would augur very well for Cochin Shipyard. A promoter holding of 73% and MF and FII holdings of 10% is very comforting to us in the longer run in terms of corporate governance issue. A dividend yield of 5% plus for Cochin Shipyard is icing on the cake. We believe that the company could have an earning of 50 rupees per year, giving it a multiple of 10. We expect the price of Cochin Shipyard to go to 500 in the next 18 months. That is by March 2022. We expect a 45% return in this stock. Current levels are at 340. The company has strategically positioned ports at Kochi, Mumbai, Kolkata, Andaman, focusing on the high margin ship repair business. The major capex of around 1,000 crore of the total 1,100 crore is already done. So in the quarters ahead, we could see these fruits being monetized, and the target of 500 in the next 1 year to 1.5 years for Cochin Shipyard as a low risk, high return investment bet.